Welcome to Is It Covered, where we break down real stories and answer the big question, is it covered? Hosted by father and son duo Bruce and Brian Chapman of the JD Chapman Insurance Agency. This podcast will help you navigate the world of insurance with stories, tips, and answers that really matter. From personal to commercial coverage, we've got you covered. Now, let's get started.
Alrighty, welcome back everybody to another episode of Is It Covered? As always, I'm Brian Chapman here with my co-host Bruce. Today's episode is going to be a relevant one, but before we get into it, we just want to let you know that Is It Covered podcast is really meant to kind of take you through the wild, the wacky, the normal, and things that happen within insurance. It's meant for kind of tips and tricks. Every claim's different. We definitely encourage you to talk to your agent or your insurance policy holder if you have questions about a specific claim. We're just trying to demystify some of the insurance world. So today's episode is, we're going to talk about it. It's timely. This one came up because of all the recent natural disasters, especially the forest fires that had just happened in California. So we'll be talking a little bit about how natural disasters affect insurance in non-disaster zones like here in New York. So, these things happen in California. You hear all the time, well, why is it affecting me here in New York? Not only that, but all the other wind events that have happened throughout the last year or so. So, I know that again, it's a hot topic right now, and everyone has really been asking, am I going to see an increase in my insurance? So I'll turn it over to you, Bruce, and kind of, can you let us know why natural disasters have a significant impact on insurance, even though we're not in that area?
Yeah, absolutely. So like you said, we live in an area that is typically free of big natural disasters, things like hurricanes and floods. Although we do have our share of floods, that's for sure. Think about the southern tier. But we've had experienced more tornadoes this year than we ever have. I think there was something like 15, which is very unusual. And but the wildfires, how do all these things happen? How do they, not so much how do they happen, but how do they affect insurance throughout the country? And why do we have to pay for that? So a lot of it is insurance companies. First of all, you're seeing this mainly in property type claims or property insurance. So things like your homeowner insurance, certain commercial property, things along those lines. The idea of insurance is to spread the risk so that you spread the risk among many and that everybody pays a little bit. When the risks go up, then that amount of money isn't enough and it needs to be spread. So the options are, if you don't do that, insurance companies go out of business and then you have no coverage at all. And actually, that's the thing that's starting to happen in Florida with their hurricanes. It's starting to happen where obtaining insurance is much, much more difficult in areas that are prone to those types of natural disasters. So again, that's that spread of risk. Also, there's a thing called reinsurance. So you're familiar with reinsurance, right, Brian?
Yeah, absolutely. It'd be good to tell people about it.
Yeah, so reinsurance is the insurance for the insurance company. Doesn't insurance sound like it's full of a lot of doublespeak?
Always.
Yeah. So an insurance company says, hey, you know what? We're going to take the first, say, $100,000 of any one given claim. And anything over that, we're actually going to purchase an insurance policy that will kick in and pay the balance of that. So what happens is these reinsurance companies, there's not a ton of them, a fair amount. They are certainly countrywide, so they're insuring other insurance companies throughout the country. But also many of them are are worldwide, like Swiss Re, it's called. There's some other ones, Munich Re, and they insure the insurance companies. So then the risk is spread out even further. But as the risks increase, so do the premiums for the reinsurance. And also maybe deductibles go up. So your insurance company might say, well, we need to take the first $250,000 now. So what happens is it spreads that risk out throughout the whole country, even though we are not really exposed to that. One of the other things too is you see on certain insurance policies is they change the policy terms. They tighten underwriting guidelines. We've certainly been seeing that a lot. They require proof of mitigation efforts. You're seeing that a lot now in California, where they want people to strengthen their homes and have, do all these things to avoid their homes burning down.
Sure.
The other thing too, and I touched on it, reduced availability of coverage. Companies are like, man, we just can't keep doing this. So we're either pulling out or we're going to stop writing all insurance in some of these fire-prone and disaster-prone areas.
Is that, what happened? Everybody said about the State Farm had pulled out previous to this fire. Maybe that was something that was on their mind. This was kind of a higher risk area, and
Absolutely.
I know it happens a lot all over the country.
Absolutely. Now, some of the things too, like flood, you have to buy a specific flood policy. Mm-hmm. So if that kind of falls outside of that a little bit. The states, though, too, have different insurance regulations. So some of them might not allow an insurance company to raise their rates adequately, which makes the insurance company say, we can't keep bleeding like this. We have to pull out.
Right.
And then also there's inflation and repair costs. So as you know, everything's going up. Mm-hmm. Look at eggs, right?
Yeah.
Yeah. It's like golden. The yolk is gold now.
Yeah, pretty much.
Right, for sure. But those things all drive that up. So kind of the bottom line on this is, even though these things don't directly affect us, they do directly affect us. So that it's important to kind of realize that. It's insurance companies, you want them to stay in business. That's important.
You need them to stay solvent so that they can pay your claims. And I think a lot of people think insurance is very specific to just them and their risk, which it is, but there's a bigger picture involved, as you just said.
And a lot of it has to do with reinsurance. So even your little company that only insures in upstate New York, they're subject to reinsurance.
Oh, absolutely.
Yeah.
Absolutely.
So, Brian, what can businesses or company or homeowners do to prepare for changes in natural disasters? You got anything that? Yeah,
I mean, you want to, and this is something that's also being discussed in California now, you want to make sure that your insurance policy for your home has the right value. And when I say the right value, I mean the replacement cost on your home, or what it would cost to rebuild in today's dollars.
Exactly.
I think what you're seeing a lot right now in California is that people are realizing, oh my goodness, I was insured for X, but it's going to cost me Y to rebuild my home. So not only did I lose everything, but now I'm almost being, I guess, re-victimized in a way where now I have to come up with an additional amount of money to rebuild my home to the same like, kind, and quality.
Absolutely.
So it's important to make sure that your policy is written correctly with the right amount of limits on your for the actual structure itself. You talked about it a little bit earlier. If you're in a floodplain or a flood zone, there's some additional insurances that you can buy for flood insurance and earthquake insurance as well.
And the bank makes you buy those too.
Yes, most of the time that is dictated by the bank.
That's a surprise too, isn't it?
Yeah,
People,
exactly.
Like, this awesome home that I have, and all of a sudden the bank wants me to buy this giant flood policy that's going to cost me $3,000.
Right.
That's a shock.
Yeah. Oh, yeah. It definitely is. The other things that you can do too, and this is a reoccurring theme with us, but is maybe spending your deductible up front to mitigate some of your risks. So if you're in an area where you're a wind-prone event, maybe you upgrade your shutters and things to more storm-resistant shutters. If you're in a wildfire area, you might want to think about like different materials that the home could be built out of, or fire retardant landscaping, things that again mitigate your risk. Cleaning brush. Yep.
And just because we have a lot of woods around here. I know, I've hiked in them. So have you. And I'm always wondering, it's like, wow, it's amazing that we haven't had any forest fires. It doesn't mean we can't. But, homes here are at danger as well.
Absolutely. And something that happens here a lot too is, there's a loss of power, through these various storms. So making sure you have some form of like a backup generator or some alternative form of power that, will get you through that situation, and maybe not, allow you to not file some form of a claim if things spoil and so on.
And it doesn't have to be a whole house generator. It can be a portable generator. And many insurance companies will give you a credit for that too.
Yes,
That's a great
huge
example of spending your deductible up front, if you ask me.
Exactly. And always have some form of a disaster plan. And this really just goes back to maybe having an inventory of your home, maybe take a quick video, any high dollar value items, you want to make sure that you've got an inventory of that. And then just stay informed on what's going on in the insurance market. And that's, again, a value of an agent to lean on.
Absolutely. I totally agree.
So not really a claim scenario, but definitely a topic that we needed to discuss.
Well, we know for a fact that fire's covered. So in that case, it's covered.
Yeah, there you go.
Flood, you have to have a flood policy. So that's a maybe if you have a flood policy. Wind, basic cause of loss, that's covered as well.
Yep.
So there's a lot of things that are covered causes of loss, but certainly there's a few that aren't.
Perfect. Well, thanks for tuning in, everybody. We appreciate it as always. Again, we do encourage people to, reach out to us if they have questions specific to this or even any claim scenarios in general. They can they can send them to me directly, Brian at jdchapmaninc.com.
Thanks for listening to the Is It Covered podcast. To learn more about how JD Chapman can assist you with all of your insurance needs, please visit our website at jdchapmaninc.com or call us at 315-986-4062. JD Chapman, we've got you covered. This podcast provides general information only. It does not offer or bind insurance coverage. Coverage cannot be changed or confirmed through this podcast, email, voicemail, or fax. Insurance only takes effect once confirmed by a licensed agent. For specific coverage details, please call us at 315-986-4062. All coverages are subject to the terms, conditions, and exclusions of the issued policy, which may vary by state. This podcast does not provide legal, tax, or financial advice. Please consult a professional for those needs. Links to other sites are provided for convenience. We don't control or endorse their content. Any claims, scenarios discussed are hypothetical. Coverage decisions depend on the specifics of each case.